Mr. Timothy Geithner, US Treasury Secretary, saying that there is no risk of that, in other words, that the US losing its AAA credit rating. This is after S&P cut its outlook from stable to negative, and also saying if you listen carefully now, you see the leadership of the United States of America recognizing now is the right thing to do for the economy. In other words, raising its debt ceiling. And also making a decision with regards to the budget and
the backstory here. I mean, we've talked about this so often. It was such a pity you weren't here. I could have raved at you yesterday about this issue. You know, a couple of years ago, the US had a surplus, right? All that happened in the intervening years is that George Bush pushed through some heavy tax cuts for the rich, and then he pushed through a Medicare extension. Then you had a great recession, and suddenly you're like trillions in the hole. So what Geithner is saying today is that if you listen carefully, the debates in the US have shifted from total disagreement about tax cuts and about spending to an environment where both Democrats and Republicans accept that they're going to need to get their house in order. So he's like saying, this S&P thing, it's nonsense, you know? You can just chuck it out. It has no merit.
Okay. Perhaps we could look into the fact that the ECB has started cutting back on bond purchasing. Subsequently, bond yields in the Eurozone region rising significantly. We also have a scenario that could play out in the US where you've got quantitative easing that could come to an end. In other words, the stopping of bond purchasing as well. So if this is could this be a precursor as to what the effect could be? US stopping to buy bonds, a rise in bond yields.
Everybody loves US treasuries, and all through the crisis,
except for PIMCO, of course.
They've been hoovering them up. Well, PIMCO is apparently back in the market buying.
Actually today.
So it turns on the issue of whether there will be long-term, fiscal discipline, because clearly you can't, as any modern economy or any economy out there, the Europeans are in the same boat. They cannot just simply have benefits that they can't afford. Everybody has to be able to pay for the benefits they want their old people to have. So we've discussed this before. They're going to raise the retirement age. They're going to bring in tax reforms, which will result in higher taxes for the rich.
And then every hunky-dory, and in fact, yes, PIMCO has gone back and bought US treasuries.
Those slimy guys. You know, my theory, though, about why it is that the market went down 2% yesterday and up 1.5% today is it's the Jews' fault. Because they were off on Monday, because it's that Pesach Passover thingy of theirs. So like all of them were off the market. And if they were just around, they would have seen through this nonsense and we wouldn't have had the fall that we had on Monday.
And of course, we also have Easter holidays coming to the fore as well. Gold hitting new all-time highs, 1,500, very close to that level. So you're still thinking that everything is fantastic.
Gold's a completely peripheral market, trafficked by traders and other unreliable people.